Hey, what's going on, you guys? Josh back with another video here for you. Hope you guys are having a great day so far. And today I want to talk about bottom reversals, right? Now, the bottom reversal pattern is a very common and popular pattern that a lot of traders build their strategies around. It's easy to identify with the proper scanners and gives pretty immediate returns on your capital, which means that in most situations, you'll only be in the trade for, a few minutes. This pattern is great for the newer trader who wants to trade stocks that are tanking, right? But can't really short them for whatever reason. So in this video, I'm going to show you how I trade bottom reversals and what I look for, but keep in mind that everyone trades these differently. So after this video, go ahead and look up other videos of people explaining how they trade reversals and then cater that strategy to your account size, risk tolerance, and experiences. To keep this video short, I'm going to quickly run through the chart and hit on a few key points. So if you want a more in-depth breakdown of how I trade this pattern, then go ahead and let me know in the comments. And lastly, before we get started, I want to quickly reiterate that I'm not a guru, nor do I know everything about trading. The videos I make are a product of my experiences and the studying that I've done over the few years that I've been doing this. So without further ado, let's go ahead and jump right in. As you see here, we're looking at NBEV. This is a pretty textbook reversal right here. This is a $7, $8 stock, right? So not too high priced. However, if you look at something like EBIX, for example, the day here where we kind of bounced off here, we had this nice little bottom reversal and recovered, $3 on the day. Everything looks a little bit differently, right? It's a higher price stock, 60 to 70 bucks. The reversal looks a little bit different. And for people that trade reversals, they might be interested in something like this. Whereas me personally, I want something like NBEV that has, a big chart. Look at the daily chart here, has a big chart. And it has room to pull back here and bounce, right? So whenever a stock is pulling back and having a reversal, in my mind and in my opinion, the further it goes down, the better, right? So if this thing, instead of dropping $1 a share, had it dropped $2 or $3, $4 a share, that would have been even better, right? Because when it does reverse and have that bottom reversal, there's more range there for you to capitalize on, right? There's more price action there for you to take advantage of. So what we're going to do is we're going to start from the beginning here. And the first thing I do whenever I wake up in the morning is I do pre-market analysis, right? And during that pre-market analysis, when I'm looking at a stock, I quickly and, pretty simplistically identify support and resistance levels that I know might play a factor during the day. So that's what we're going to do here before we get into the chart, because you're going to see as we start with this and then move into the intraday chart, you're going to notice that some of the levels that we define here are going to play a part when it comes to that reversal that we're looking for. So really quickly here, $4 is resistance back in the day here. And now if we zoom in a little bit, it's acting as support, right? So $4, that nice whole dollar number. Again, another whole dollar number that we want to pay attention to is right here, $7. That's support. 3 days it held in a row. Even 650 here. The lows on these candle wicks could act as support. These whole and half dollar numbers, definitely something to pay attention to. Resistance overhead really quickly here. We got $9, right? Resistance. And then last but not least, obviously $10, and you could even use $9.50 here, right? So whole and half dollar numbers are definitely in play. They're definitely being respected on this chart. So now that I see that and I can see these quick, simple support and resistance levels, let's go ahead and look at the intraday chart here and see if we can correlate that to this reversal. Now, if we zoom back here, let me actually go to the 5-minute chart for a second so that I can show you. If we zoom back here, we can see that the prior close line on this day was around 845-ish, right? Now, 845 prior close line, it's an amazing area to watch for, support and resistance levels, because the prior close line is definitely respected by a lot of traders. And so, as well as looking for these whole and half dollar numbers, we want to go ahead and pay attention to this level as well. Now, you see here, the prior day, we closed at 845-ish. We didn't really do anything after hours. The following day, we opened up, perked up to $9, which was respected as resistance. If you remember, we marked this on the daily chart. After we pulled back from that $9 area, we bounced off that prior close line, right? Perked up, came back down, and we snapped that prior close line. And once that line got snapped and we broke below it, then, the bull or the bears took over and we started to free fall a little bit here into the market open. Now, there's that analogy that goes, the bulls take the stairs, the bears take the window, and this is a perfect example of that. We snapped this line and then the bears just took over, and in a matter of a couple minutes, we were down 845 to down almost $1.50 a share, right? So the market opens and we try to perk up here. Let me go to the intraday chart so we can see the 1-minute candles here. Market opens and we start to perk up here. We get rejected and then we drop $1 a share down to the sevens, the low sevens and even the high sixes here. And if you see here, if I draw a line through this, let me go and clear some of this actually. Clear some of this out of the way here. If I draw a line through $8 here, that whole dollar number of 8, we can see that as we came down, we dipped under it for a second, came over it, came under it, and then we started to peak out at $8 here pre-market. Now, I do talk about this sometimes, about this kind of over and under trading that happens around these key levels where a stock will come under it, come over it, come under it, and then it'll peak out at that level and kind of tell you which way it's going to go, right? So it'll come under it, over it, under it, peaks out. And so now that it peaks out, I know that there's a chance that this stock's going to go lower, which it does, right? Drops from 8 down to 7.60, so 40 cents a share. We catch a base, we rebound up to $8, and if you look here, that prior level that it had resistance at pre-market before the bell is now being respected at the market open. So once I see that, if you have shares to short on this, you can go ahead and take a starter here, go ahead and get short or whatever the case might be. But like I said earlier, for a lot of the newer traders who don't know how to short, maybe they don't know how to locate shorts, or maybe their broker just doesn't have any shares available for them, you won't be able to take a position on this. However, what you can do is look for a potential reversal here. So as the stock peaks out at $8 and we start to pull back here, we have this nice fade, and then we just drop and fall all the way down to $7 and catch a base. But one of the indicators that I look for is relative price action compared to prior price action, right? So if we take a look here, we have these two massive candles here. And if we take a look back here, the prior price action leading up to this big fade, we only have about 5 candles here. And the price action on these candles aren't that impressive compared to these 2 candles. Now, to put things into perspective, let's go ahead and take a look here, and I'll clear this off one more time, of what prior price action and relative price action looks like. So if we look at these 5 candles one more time here, right, in about 5 minutes or 4 minutes, depending how you look at it, we went from $8 a share down to about $7.70, right? So we faded about 30 cents a share in about 5 minutes, which is a pretty decent move. However, if you look at these 2 candles here, we dropped from $7.70 down to a low of $6.90 in the span of 2 minutes, right? So less than half the time it took us to go 30 cents, we gave back 80 cents of gains right here in 2 minutes, right? So with that being said, if you just look at that price action, you can clearly tell, right? It doesn't take a rocket scientist to tell that this is an increase in price action relative to the prior price action. So that's an indicator as far as price action goes. That's an indicator that I look for when it comes to anticipating a reversal, right? So once the stock drops off the face of the earth here, another thing that I pay attention to, and I'll kind of pull this up for a second so you can see it, is relative volume compared to prior volume, right? Increased volume relative to prior volume. So as this stock fades and we have this massive drop here, I want to look at the volume to see if the volume is correlating to this move, right? If we have an increase in price action relative to prior price action, coupled with an increase in volume relative to prior volume, draw a circle here as well, I know that, hey, this stock has a high potential for a reversal to come. We have the 2 increased indicators here that I'm looking for, and now I want to look for that reversal and start paying attention to whole and half dollar numbers that I can then use to anticipate an entry, right? So as the stock falls here, and I can identify these 2 indicators that I'm looking for, the next thing I start doing is saying, all right, well, where are the whole and half dollar numbers I should pay attention to? Boom, 750. Well, we just snapped 750. Obviously, that's not going to be respected. So where's the next area? Oh, look, $7, right? So we come down to $7, we break below it. And when this is all happening, I'm watching the price action, right? I'm looking at level 2. I'm looking at time and sales. I'm looking at the bids and the ask, right? I'm looking at the spread, because a lot of times the spread will be pretty crazy when you have this drop here. The spread will be pretty crazy when you're dropping down here. But as you start to kind of change momentum, what will happen is the spread will kind of tighten up a little bit, right? You might have a 15-cent spread or something like that. God knows, just as an example. And as we get down here and we start to change momentum and the buyers start to step up to the plate, that spread will drop from 15 to 10 to 5. And the next, we'll have, a 2 or 3 cent spread maybe as we start to change momentum here. So the stock will come down. We'll kind of jiggle around here for a little bit. And when this is happening, you're looking at the volume, looking at the price action. You want to pay attention to that level 2. And the level 2 will start to change a little bit, right? Because on the level 2, on the ask, you might have 5 people sitting on the ask, right? And then over time, you'll have 1 buyer on the bid. And then all of a sudden, you'll have 2 buyers. And you'll have 3 buyers on the bid. And then the people on the ask, they'll start dropping off. So instead of 5 people on the ask now Now you only have 3 people on the ask. So people start stepping up to the plate on the bid side. People start dropping off on the ask. And as this is happening, you notice that this stock starts to kind of rebound and hover around the $7 area. Once it catches the base here and you see it start to perk up and you see those buyers start to step in, that's another indicator that I look for. Now, it's almost immediate and it's almost, it happens in seconds, right? It's almost like you have to really feel it out, and it takes time to really get a hang of it. But if you want a more in-depth video, again, I'll probably record some live trading examples of how this works out, and I can really show you the level 2 and time and sales of it. But for now, we'll just focus on the chart here. So once all these indicators start to play out, you have the time and sales and level 2 coming in. You have the relative price action. You have the relative volume. You have the stock come and hover around this whole dollar number of 7. Now you have a bunch of different things that you can couple together that gives you conviction, that gives you the conviction to take a position on this, right? So for me, obviously I missed this move. I didn't take a trade on it. But for me, had I gotten into this, I probably would have started in, right? Maybe half size, maybe a third size at around 710. Once the stock started to kind of recover the $7 area and we started to perk off of it, I would have jumped in at around 710. And maybe had a 10-cent risk, or I would have taken even smaller size and given myself a risk down to maybe 690 or the low of this candle wick, which is 686. So I would have started in at around 710 realistically with small size. And then as the stock continued to move up, I probably would have added maybe at 720 to maybe full size or whatever the case might be. And then in this case, it worked out pretty perfectly here, and we tuned it all the way up to about, looks like we got as high as 770. So about a 10% move on this stock, and that's a pretty good move, right? Pretty good move, pretty good gains here. And I would have, had I sized in fully at around 720-ish, I would have had, plenty of room to the upside to take profits, right? And if you look here, you can actually see that we started to kind of peak out at this prior low. Let me go and remove this really quick. We kind of peaked out at this prior low here. So this could have definitely been your profit target, 750. Or 760, I'm sorry. 760 is your profit target because the prior low at the market open was 760, so there's a chance that we'll end up snuffing 760 and pulling back, which is exactly what happened. Came up to 760, perked above it to 770, and then we dropped all the way back down to 730 before testing it again. So this is what a reversal looks like. Pretty simple. Again, I'll just reiterate for you. A couple indicators that I look for on a reversal is high volume compared to prior volume, or increased price action compared to prior price action, increased volume relative to prior volume, right? I look for that whole dollar number for the stock to bounce at. And then what I also look for is the time in sales and level 2 at this area. Once the stock gets close to that whole or half dollar number that I'm anticipating a reversal at, I pay attention to the level 2 and time in sales to see where the orders are coming in at, right? Where are the buyers at? Where are the sellers at? Are the buyers stepping up to the plate? Are the sellers starting to fall off a little bit? And then last but not least, I want to make sure I pay attention to that daily chart. And you just want to make sure that the stock is in play. You want to make sure that the stock has volume, the stock has range, and that the volume and the range are higher than the typical volume and range on any given day, right? So that's pretty much it. One more thing to take note of is that I don't like to use a lot of indicators. Obviously, I don't trade with Thinkorswim. This is just a charting software that I use to make videos and to do my nightly watch list and stuff like that. But as far as trading with Thinkorswim, I don't really do that. I use a different charting software. But for videos, I think it's a great charting software to use to make videos and explain strategies and patterns and stuff because everybody uses it. So keep that in mind that, even on my Thinkorswim software, the only trailing indicator that I use is VWAP, right? I don't use RSI or, moving averages. Although those are fine, use what works for you. I like to really focus on the price action, the level 2, the time and sales, and the volume, right? Those are the indicators that I usually use. And the only trailing indicator that I use is VWAP. So I just wanted to throw that out there just in case you guys are wondering why my chart looks so clean, right? So anyways, thanks for watching, guys. I appreciate you taking the time to check this out. Let me know what you think in the comments below. And if you want to have that second video made where I go a little bit more in depth about reversals and what I look for and how I play them. And if you maybe want to see a live trading video of me trading a reversal, then let me know and I'll definitely work on getting that out for you. But again, thanks for watching, and I will see you guys in the next video.